because anybody can get into the trade, but who can stay in the trade and not get scared out? Who can stay in the trade and be in a good situation to add when the best levels present? One of the main reasons I started this company is because I just noticed so much bullshit, sorry for cursing, so much nonsense out in like the education space, that I just wanted to offer more of like professional level education. So when you see all these different gurus who are touting their big returns that they can promise you, that they can get, if we all did this trade, and right now there's 44 people on this webinar, on this presentation, we are going to have 44 different results. Those who are more experienced and more confident are going to end up taking advantage of this trade and making a whole bunch of money. Those who are less confident, those who are trading before they actually are really educated, they're going to lose money on the exact same trade. So when anybody offers you a glimpse at their returns or the biggest hustle of them all, when somebody shows you their what do they call it? Like their P&L graph. What do people refer that to? I don't know, there's some silly like name that gurus use. Their equity curve. Thank you, Stu. When someone shows you their awesome equity curve that looks so pretty and say, you know what? If you work with me, you too can have an equity curve that looks just like this. Ooh, so easy, right? From this example, can't you see how this person has no clue what they're talking about? And I use the analogy of I could take my 9-year-old to get some baseball lessons and he can learn how to hit. My kids play a lot of baseball. If he then turns to the coach and say, hey, I just took a lesson with you for 45 minutes. What's my batting average going to be at the end of the year? The guy's going to laugh at him. I don't know, kid. Are you going to go practice? You know, what's your work ethic like? Stay away from the equity curve promises. This is a real reason for getting into a trade. And now, once you see this, what's the trade, right? What do we do? What are some things that we can do? You know, and yes, we are playing Monday morning quarterback because I want to go over this lesson. What are some trades that we could do to take advantage of this? Okay, and this is where it's kind of like audience participation time. Once we see this and we determine that gold is inexpensive relative to oil, what are some trade ideas that we can do? And this is where I'm going to show you that 44 traders are going to have 44 different results. What are some trade ideas? Gold's very inexpensive to oil. Okay, we could buy gold miner calls. Okay, now if we buy gold miner calls, long gold, and I'm just going to do this for a few different of the examples. Okay, let me buy some gold calls. Buy some gold calls depending on if it's vol, and buy oil puts. Okay. Okay, so this would be buy gold calls, buy oil puts. Long GDXJ calls, and now we're selling a vertical call spread on XOM. Anybody else want to play? Go long GLD stock, go short USO. Anybody else? We can use futures contracts. Sorry, long GDX calls, and then short something, some kind of vertical. So there we go. Okay, long gold futures, short gold, short oil futures. Okay. So what I'm trying to show you, well, for one, so watch, so this doesn't cover this because you could lose money on this and you could still be correct. So what we don't want to do is once you have an opinion, you don't want to put on a position that you're right on your opinion, but you don't get paid, right? Because we know we're going to be wrong occasionally. And when we're wrong, we're going to lose money, right? hopefully not too much. But what's really important is when we're right, we want to make money. I want to show you this because there's so many different ways to express an opinion. Something that you could use is if I go, I'm just off screen here. I'll put this page in the chat for you guys if anybody needs it. Okay, so this is the CBOE volatility index. The cool thing about this page is you can look at the VIX. You can look at the NASDAQ VIX, S&P, Dow. It breaks it all out. What about if we scroll down and trying to not make this lesson too confusing? I hope I'm doing an okay job. What about if we scroll down and we use OVX, which is the crude oil volatility index, and we use GVZ, which is gold volatility, and now we take that lesson even further because we know, playing Monday morning quarterback, that gold was inexpensive relative to oil. And we talked about the different trades that we'd want to do. Well, now if we bring the volatilities into effect, into consideration, GVZ, OVX, let me overlap them to make it even more clear. Look at that. Maybe we look and say that oil volatility is elevated relative to gold volatility, but historically they trade, pretty darn close to the same. See that? The data is kind of crappy because it's ThinkorSwim. That's why these spikes and weird stuff. But now we start drilling into a trade, right? So long gold, long volatility. Short oil, short vol. If we call this, our objective. And the point, what is the point? The point is people have opinions, and that's great. But professionals are going to go deeper and deeper and deeper and deeper. They're going to peel back the onion, and they're going to long gold, long vol. So all of these are going to be long vol. Whenever you buy options, you're long vol. Short oil, so this one wouldn't work. This wouldn't work. This wouldn't work. These are just short stock. So maybe you'd want to do thousands of ways you can get long gold vol. Okay, you can go a long vertical and a short vertical. You can do futures against futures if you want. But what I really want, the point, dig deeper into every trade that you make. And really the point is going to be, right now, what you're doing is not enough because you have to compete with me and I have to compete with Goldman Sachs. So in order for you to compete with me, you at the very least have to go through this exercise, and we can go even further. So you get so you can dig deeper and deeper and deeper. But what you really want to do is have an opinion, develop an opinion with a reason for that opinion, and then find the proper way to express that opinion. And that's what I want to teach. Okay, does that make sense, guys? Kinda. I want you to watch it back. There's a lot to it, but we just did that in this one relative value trade. We should do that in every single trade that we make.